Hello, I'm Robert and welcome to my channel where I talk about everything automated algorithmic trading or simply algo trading. Today I want to get into the details of this crazy week. It has been an insane one and quite profitable. And that is part of where I'm going to start the discussion right now. We are looking at my equity chart since I started trading Eurusd on roughly December 16th, using my current settings for my grid trading strategy. I've been asked a few questions that I think deserve an answer because they are really part of how I trade and mitigate my risk. And that is, I use multiple positions or grid trading. I don't just place one big trade and wait for it to occur. I place several trades at fixed intervals at fixed values. You see, I laid out my entire trading plan from the very beginning, where every single trade I place, all of them that I planned on taking, has a specific price point and a specific size. That is, I took my balance that I wanted to put at risk, the amount I actually wanted to trade, and I metered it out in very specific portions. That is really the best approach you can do for your trading, because it guarantees that you can always trade for a specific range. Truth be told, my trading approach developed from a very specific reason. I can't trade with anything. I literally could not trade my way out of a wet paper bag. So I needed a way where I could trade without having to worry about where the market went. I needed a plan that gave me a very specific approach I could follow, no matter how stupid I was during the process. And if you watched any of my previous videos where I've talked about not being able to leave the machine alone, well, you've seen my stupidity in full force. This plan is so simple because I have to have it that way, not to screw it up. And what you see on the screen, the equity curve, is how that actually looks when laid out, planned out, and meticulously carried out. It's a slow, tedious process. It's progress over time that currently has me at $53 in pure profit on this account. I currently have roughly 15 open positions. So let's see how that actually plays out trade by trade. And we see here exactly how that plays out. You can see exactly when I entered my trade, how long the trade lasted by the length of the line, and of course in this case the profits I've made. Now we can see at the very beginning it takes a lot of trades, and I got lucky the market moved in my direction, but luck doesn't hold out very long. As we can see, the market started going against me, and I started accumulating all of these trades. Now, if I had taken just one single position at a time with a huge monstrous value, this would have been a severe loss. Because no matter which way I think the market is going, it goes exactly opposite. So by carrying out this approach in such a methodical approach, such a concise level of detail, I don't have to worry about where the market is going. I simply follow it. I follow my plan. I follow my strategy. And that's the whole point. That is how you become successful in trading over time. You figure out where you don't do well at in your trading. What are your problems? Can you set something up and you get antsy and get out too early? Do you get out too late after you've blown your account, thinking it's going to go in a direction that it doesn't? Did you set a realistic take profit? Did you set a meaningful stop loss? All of these things need to be thought about before you ever open a single position. And that's what I did in the very beginning of this strategy, of this technique. I chose a process where I didn't have to worry about where the market went. I didn't have to worry about the direction. My plan is absolute. I have exactly X amount of positions I can hold. If the market moves against me and I have all of my positions filled, I sell the lowest or last position and I buy the new position. That is, I deliberately take a loss on my oldest position. I move with the market. And as we can see here, the market is starting to really move against me. It's starting to go up in value, whereas here, the market was going down in value, moving in the direction I wanted. So you see, because I can't predict where the market is going, I needed a way that I didn't have to. That's the whole point of trading, to figure out what works for you in a meaningful way. And that is the purpose of your demo account, so that you can do so without risking real money. And once you've found a method that works for you, you have a consistent level of profits that you can achieve over time. So whether the market is going against you, as it is right now, or going for you as it did in this position, you have a clear course and path to follow. No guesswork, no questionability, no reason not to succeed, as long as you are consistent in following that plan. So let's get into today's analysis. Okay, now that we are on the chart, let's begin looking at this last week. Here we see Monday, the bears had control, and there's really very little activity considering the amount of pressure between the bulls and the bears the order book actually demonstrated. Tuesday, the bulls took control, and there was quite a bit of activity in terms of the pushback between the bulls and the bears, as we can see from the wicks. And we can see how this went quite well, with the bears really rallying on Thursday to drive the price down quite aggressively. Now, the one thing to note is the tops of these candles are all pretty consistently within a very specific range. And that's important, as that shows a more open resistance level that buyers and sellers are respecting at the moment. Friday, the bulls gained control of the market by a very slim margin, and we can see some pushback within the wicks. But there's really more to this story than we're seeing. As we can see from the order book volume sell side and buy side, where the buyers and sellers currently want the price to be. Now, the amount of distance is not very good, or not very much, so we have a bit of a squeeze situation going on here, which means we could expect a breakout either upwards or downwards. Looking at just the order book buy and sell sides within the volume level, it suggests that the breakout is likely to push downward if it happens next week, simply because the buy side has so much more strength versus the sell side. But that doesn't really mean anything, as we've seen from previous markets. When we look at the weighted pricing of where the buyers and sellers want to be for the pricing itself, we see a much wider band, suggesting that we are not necessarily at the bottom of the band, but rather that there is more room for the market to breathe before pressure starts to really build in terms of what the market is likely to accomplish. So let's look back into the market a little more. So now we are going to zoom out of the market and actually see more data. And we can see from last week the bullish push drastically in terms of where we ended up, the week before last, in terms of where we ended up last week. That is, you see how we ended up with a bit of a cap or a upper level resistance boundary to the market that guaranteed a significant probability the market would push downward. I believe we are still in that impact, and the market is likely to continue to push downward more. So let's continue to zoom out and look at the market in greater detail to determine exactly what we think the market is likely to do. So as we continue to scale out and look at the market and scale down, we can see that we are already at a pretty high point within the last couple of months. And we can see still the multiple levels of ranging that took place at certain points before the market pushed upward at each range. And we can see how the bulls and the bears, the dynamic between the two and the back and forth tug of war really played out at a bigger picture. But this is the problem of trying to predict where the market is going to go. It simply doesn't work. You can't predict it because there's too many factors involved. We can see now the yellow line, the lower portion of the range that the market has been at for quite some time. And so by looking at the entirety of the range, we begin to really see where we have been working and just what is likely to occur in the longer principles. We are pretty much just above the midpoint or roughly at the midpoint, so there really is a lot of room of where the market could go. Remember that these are where prices have actually been within the last 2 months. So that is likely to be where prices are going to stay in the near future with a reasonable level of probability. Now, could we come down to lower levels as we did in the beginning of March and the end of February? Of course. We could also end up reversing course and breaking the upper range level and going upwards. Realistically, though, I don't see the probability of price going above this level anytime soon. There isn't enough evidence in the order book to suggest that it is a likely scenario. That's not to say it's impossible or that it won't happen, because it can happen and has happened several times in the past. Just that overall, when you look at the order book at a bigger picture, the pricing suggests lower values for at least a little longer. Though if we look back far enough, for the beginning of 2024, for example, we can see where the market did indeed go above the yellow upper range for a short time before it retraced back into this range. But we can see, though, as we progress, that the market has stayed within a reasonable level, going all the way back to July to August of last year. So we have a confidence within this portion of the market that we are currently trading. that we can see within a reasonably good point of reference what to expect out of the market, at least for the next few days, potentially the next week. I believe trying to go beyond that is not very wise or valuable in your trading approach. So we can see here, this is what I expect to have happen. I expect price to remain within this area over the next week. I don't believe price is going to move that drastically, and I don't see any indicators within the market to suggest that it might. So I think range trading, particularly within the yellow lines, is going to continue to be very profitable if you use a static approach. If you use a floating approach, it isn't going to matter as long as you can float with the market. And that really is the critical point, I think, of this analysis. Don't try to predict where the market is going. Simply accept where it is going and float with it. Well, that's really it for this analysis. If you want to see more analysis like this, or even on different pairs, leave a comment. Let me know. What pair would you like me to analyze using this technique? What pair would you like to see analyzed, whether it be cryptocurrency or Forex? If you have any questions, please ask them. Leave a comment. Share your thoughts. If you like this video, please give it a thumbs up. It really does help me grow this channel and help me know what content resonates with you, my viewers. Thank you for watching, and until next time.